earnings conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amit Dixit from ICICI Securities. Thank you, and over to you, sir.
Thank you for joining the call today. At the outset, I would like to thank the management for giving us an opportunity to host this call. From the management team today, we have Dr. Sanjay Kumar Jha, CMD, and Mr. N. Gauri Sankara Rao, Director Finance. Without much ado, I would invite Dr. Jha for opening remarks covering the performance and outlook, post which we will open the floor for an interactive Q&A. Over to you, Dr. Jha.
Yeah, very good morning to all the investors, stakeholders joining through this investor conference call. I am very pleased to join with all of you, and with me we have our Director of Finance, Mr. Gauri Sankara Rao, and we have our Additional General Manager Marketing, Mr. Babu is there, and Company Secretary, Mr. Paul is available with me. So I would like to start from the results which we have you have seen for the second quarter for this current financial year. For the second quarter, we have achieved a turnover of 227.48 crores, and we have registered a growth of 25%, around 26% against the previous quarter of the previous financial year. And also the VOP has increased by 16% compared to the second quarter of FY2023. There is a substantial increase in the total VOP and turnover from in the half-yearly basis also. H1 of this FY24, we have a growth of almost around 40% on the turnover and also 21% on the VOP compared to the FY of 23. However, there is a drop in the PBT PAT for the FY24 come to the FY23 on the quarter basis also and the half yearly basis also. And we have the reason behind that mainly because of you see our all expenditures are well in the control, except the raw material has taken the major I think toll in this quarter half-yearly accounts on two counts. First, because of the consumption also has been on the higher side, because many of the alloys which we have produced during this period is all super alloys, which is a nickel-based alloys. You know, nickel being a very costly raw material, it has been there is an impact. But moreover that the increase in price also is there. From the if you see the FY23 to FY24, there is a substantial increase in the raw material cost, which has given the major impact, and that part is almost coming to almost around more than 50 crores is coming because of the increase in the cost of the raw material. So this is mainly because the superalloy productions have gone up in this quarter, and we see that the possibility of reducing and consumption and all because the requirements is mainly for the aerospace grade, and aerospace grades the virgin pure raw material only is required to be put for making the different heats. So we will see that as we have the product mix, it may get stabilized in the future. Our order book position also is coming all consistently. It is around 1,500 crores, and if you see in the H1 already we have booked order almost 720 crores order we have booked in the first half and H1. And we'll be seeing that similar type of growth coming in the second half also, the indications on the order book front. Export has been also significantly up, but of course the base was very less in the last financial year. So we have there's a substantial change because of that. But we expect that this trend will be maintained on the export front also for this financial year. So with this, the initial introduction, now I'll be more comfortable in taking the questions because you will have the many queries, so we can have the questions coming from our investors. Thank you.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Venkatesh Subramaniam from Logic Tree Consultants Private Limited. Please go ahead.
Yes, good morning, Dr. Jha.
Good morning.
Wish you a very happy Deepavali and a very good New Year ahead.
Happy Deepavali to you also and all our investors, and New Year ahead for all our investors. Thank you.
Sure. Thank you so much, sir. Sir, basically 2 questions, sir. You're saying, of course, Midani is a very unique company, and we are looking at being a provider of various solutions in the defense and other spaces over both in domestic as well as exports. My question is, what is the total size of the opportunity that Midani can participate over the next 3 to 5 years? What is a broad, big picture number that, considering if Midani had all the resources in place, what is a big picture? Number 2, what is it that we can target as an entity over the next 3 to 5 years? So my question is, for example, if the total size or the pie is 12,000 crores or 15,000 crores, can we have a top line of say 3,000 crores over the next 3 to 5? Do you foresee that happening, and are we prepared for it?
Yeah, this is very good questions, I'll say, and we have been working very hard to find out that what will be the opportunity in the future, and also the many our internal assessment we have done the market analysis, we have seen our potential, and considering, as you said, the market potential is of 12,000 crores, so this also is a very good figure. And definitely you'll be seeing the growth in our sales also, revenue also coming in the future. And in fact, in this quarter only, in this half yearly only, we have seen that 40% is a change in growth in our revenue on the half yearly basis. And if the trend continues, I think we'll be definitely coming to not less than 25% growth overall as this year-to-year basis. And coming to that future, that what will be the FY25, FY26 and all, we are expecting similar type of growth, but you know that for any growth and all, you have to see your capacity also. So whatever capacity we have now, we have made and we have invested our capex, and something is already also going on. I feel that similar type of growth will be possible for the company to maintain. And in this entire activities, I think there is a tremendous pressure will be there on our how we are able to make our finance, because mainly the coming that our working capital is the one issue which we have to see that how we can cope up. But moment you increase your capacity and all, there will be a definitely requirement of working capital increase. So you must have seen our finance cost also has gone up. So these are the challenges are there, but definitely, and also as you said about 10,000 crores of the market potential, The 12,000 crores having a lot of competition will be there. It will not be a very simple cakewalk for any companies. So we have to also see that how we can optimize our cost of production, and then we can also see that how we can capture the orders. So if we divide this 12,000 crores expected market, there will be, I think, hardly 20 to 25%, 20% only will be there for maybe for the very exclusive type of, not even 20%. I can say around 20% will be there, or 10% I can say will be there, which will be a good potential margin will be there. But the other aspect will be mainly which is having a lot of competition. So there will be a tremendous pressure on the margin also because of this. But definitely I see the revenue will be going up as we go year by year. So that will be, already we have worked out our corporate plan and all is there. So we will be sharing the information as and when we meet our investors.
Okay, sir. So just a follow-up question on that is, I understand that obviously considering the current resources and current capabilities that you have, you said over the next 3 years we can probably pursue these opportunities. But to target additional growth, you said you will be seeking more working capital or capacity increase as we go along. I'm sure you will find a solution. Midani is a blue chip company. I don't think it should be an issue, sir. But my question is, out of this size of the opportunity that you're talking about, is it just India domestic business or exports put together? Do you have two different buckets under which you classify your business growth?
Yeah, export also is in our bucket list, and export, always the target which we have set for this year is around 200 crores out of maybe almost coming to around 15% of our expected turnover. So 10 to 15% definitely will target to get the export. But export has a bigger potential also. But today the challenge is that first we have to see how we can meet the domestic requirement. Then based on that additional capacity only we have to go for the export. So the one balance has to be maintained by a company like Midani, where if the spare capacity is available, then only we should enter in the export market. Otherwise the domestic requirement also is increasing, and there is a lot of...
So I think Midani is strategically important for the country. So I think our requirements come first. Is that right, sir?
Yeah. True.
Okay. So this new announcement with Hindustan Aeronautics and Boeing, where they're thinking of setting up some facilities in India, etc. Would we play a role somewhere, sir, in that?
I think not Boeing. I think Hindustan Aeronautics and GE for
the latest one that has come up where Hindustan Aeronautics and Boeing, they're going to set up some sort of an MRO facility for Boeing planes in India.
MRO is the one area which I think MRO initially the major challenge in the MRO is first to start establishment, and then before that I see the opportunities there in the other areas where you see that that aero engine manufacturing with the GE collaboration and all is going to be take off faster than that. But on MRO also we can join. But the first of all, in any foreign OEMs supply chain, unless you enter in the main manufacturing side, then only also you can put in the MRO also.
Understood.
So our target today is that how we can enter in their supply chain of these OEMs or international aerospace companies. So this is our target. Midani is pursuing in current scenario, and we have got initially we have made some initiation. I think that will pay in the future, and we will be getting this type of opportunity also to enter in the MRO also, and as and when the requirement is. But before that, we'll be having the major. I think our target should be to enter in the aero engine manufacturing when they are entering our country. And we should see that they should also source the material from the Indian source, India only.
Got it, sir. Super. Sir, I have one more question on nickel self-sufficiency, but I'll join the queue and I'll come back again, sir. Thank you. Yeah, thanks.
Thank you.
Thank you. The next question is from the line of Rommel Jain from Electrum PMS. Please go ahead.
Hello. Thanks for the opportunity, sir, and wish everyone in the company a happy and a prosperous new year. Sir, I have a couple of questions. So, one question is on the raw material side. So, I understand, I think in the last 1 year or so, we have had a lot of challenges on the raw material side. But if you could just, explain a bit more in detail as to which are the raw materials which are contributing to the stress right now, and if at all we have any sense when this raw material issue can reverse, and probably what would be the sustainable margins, going ahead if things start, normalizing soon. So if you could give some gist on this.
First of all, regarding raw material side, I would like to mention here that major, if you see the tonnage wise, nickel is going to be plays a major role. And you see the nickel price is controlled by the LME price, that is London Metal Exchange price will be, LME will be the deciding factor. So LME fluctuations are there quite big in case of nickel. And we are also affected because of this. And we cannot stock also in the large quantity when the price is low. And when it is low, we cannot sell. So many times that effect will be there. I was just trying to turn the page and see that in this year itself, if you see our raw material, the last year in the same half yearly, our consumption, that time the rate of nickel was around 1700 rupees per kg. And in this half yearly, it has gone to 2100 almost. So there is an increase in the price in that way, and that is, I think, has played a vital role. Almost you can say around 20% increase is there. So that type of fluctuations are there, and since the nickel consumption is a larger number quantity now, so this impact has come. So as of now, nickel price has cooled down, and I am expecting this will continue for some time. But you never know. The current geopolitical situation is very tough to predict. And it is precisely controlling the entire raw material price because of this. Many places, because of the panic situation, because of the uncertainties, people try to make the stock. And when they find after some time that stock is excess, then they release in the market. So the price will be cyclic in nature. And that is going to continue for some time. And other raw material, the titanium sponge, which is used for titanium alloys, that price also has gone up almost 40% or 50% price has gone up.
So what is the price right now of titanium sponge?
Sponge, that is the input material for making the titanium alloys.
No, so what is the price right now for that, sir? The current price?
I was just, again, that price, last time it was 700 rupees per kg, and now it has gone to almost 1200. So 1200 almost, not 1200, I say almost 1300 you can say. So there is a substantial increase in the price. And orders which normally we book, we have to book on the fixed price. We are not putting any variable costing with the raw materials right now. So these are going to impact because our main product is going for the nickel-based alloys and titanium-based alloys for all aerospace and high-end applications in the area of defense and space. So there we are getting this type of impact.
So, sir,
if you ask me to predict again the price at how it's going to be in the future, right now nickel, as I said, it has cooled down, but then titanium sponge again it has picked up. It is on the higher side. So this is the scenario today, but as and when the impact will be there. Since our consumption also is not a scrap, we cannot use the scrap, recycled one. So especially we have to take on the pure metal side only. So that type of impact is there.
So, sir, just one clarification on this point that you mentioned. So, the contracts are, in terms of pricing, we don't have pass-through, right? So, they are fixed price contracts. But at the same time, when we get the contract, are we hedging it or can we hedge these prices to some extent? Or that's not possible?
See, hedging is not allowed. First of all, we are not going to hedge it. But even if somebody is, I am not talking about Minani, if some company is trying to hedge the raw material price, how we are sure about that the price will not come down? So today, suppose I am hedging the price and tomorrow if it is coming down, then you will be in loss.
Mm-hmm.
So that situation is prevailing, and for item which I have mentioned, the source will be, in fact, not you cannot, is not available plenty in the market. The source is supply itself is a constraint. Titanium sponge today we have a single source, single supply source, and there the requirements has gone up extensively. So it is not, this is a supply demand situation.
Okay.
So demand is on the higher side, supply is less. In fact, titanium sponge is controlled by the Russian company. Now Russia is not even sparing a single gram or so of titanium sponge. Ukraine has already, you know how it is getting devastated. So there is no production in the Ukraine. So there is a suffering because of that.
So are we looking at some alternative sources in titanium? I mean, what is the way out here, sir?
Yeah, there are some programs. There is some think tank is working on that. It is some for strategic requirements. So we'll be trying to see that how we can individualize in our own country. But all those things will take time. And also it will have to pay price. It will not come at a very low price as we because the initial stage you have to also have the old technology, then equipments are old, then so the increase in the production requires some sort of investment. So, and that investments are not economical in nature because economic scale is not there. See, even if you try to make the sponge in country, your requirements will be, let's say 1,000 tons, 2,000 tons, but the plant will be economical with 20,000 tons. So you have to look for the alternate market elsewhere. Otherwise, increase the consumption in our own country. So these things are all it's going to take some time. But we have initiated some program on that.
Okay. And sir, on the inventory side, any concrete steps that we are taking to kind of control this situation? Because I understand about the scrap issue, but what are we trying on the inventory side? Because sir, in terms of growth that you mentioned, revenue growth and order inflow, I think there is no problem on that side. There is no issue on the opportunity side that you mentioned. But I think inventory is one area where we need to really work hard on. So any concrete steps and any guidance you can give that in the next 2 years, we are going to come at some sustainable levels or something like that, sir?
Maintaining the current level of inventory itself is a big challenge. Because one way that your cost of raw material also is going up. So definitely even the tonnages will be reduced, less tonnage, but the cost will be on the similar line. So this is the one challenge which we are facing now, and many materials which we produce, we are not having a secondary market or secondary source where we can sell it. So this is the challenge we are facing, but nevertheless, if you see in this quarter, we have tried to control our inventory. But the scrap has gone up by some amount. So again, the scrap cost valuation will be in the higher side because your content raw material which is there in that cost also has gone up. So this is the balance is planned. But today I'm not seeing the immediate future because as you have told, I think because of uncertainty, some raw material also have to store. Otherwise, I'll be having production will get suffered. So raw material side also some inventory has to be maintained. Otherwise, we cannot maintain our flow of the production. It is happening because of this.
Okay. Thank you, sir. I'll come back in the queue for more questions. Thanks.
Thank you. The next question is from the line of Viraj Mithani from Jupiter Financial. Please go ahead.
Yeah. Good morning, sir.
Morning.
Am I audible?
Yeah, audible.
Yes, sir. Sir, we talked about this inventory raw material cost price inflation. I just want to know why can't we have a contract where we can pass through the raw in such an environment where there's so many geopolitical issues. Why can't we have this thing built up in the contract with our customer?
Hey, I think you are asking that we should have a long-term contract with the supplier.
No. Increasing since you are mentioning the raw material prices are so much fluctuating with.
Inbuilt in the order, with the customer.
With the customer, yes.
The customer, see, when the customer is sourcing material from us, they are also getting the project based on certain See, if you see that whatever project we are taking, they are also getting at the fixed price. So they cannot afford to have that type of fluctuation in their project. So let's say if I am supplying the material to HAL or any aircraft manufacturing company, they have a fixed contract, the cost is fixed. So they cannot absorb that fluctuations if you are asking that type of clause. So basically this is not possible. In certain cases earlier when we have the long-term order coming from, let's say from space earlier where the order is for 3 years, 4 years, so there we had some provision for that raw material sort of that inflation and all, it was inbuilt in that. But it is not being done in all the projects because their supply time is very less. Now we are getting the orders where we have to supply within 6 months, within 3 months, within 4 months. So for that, no customer is willing to give that type of provision.
And so what will be our breakup of our revenue and order book, if you can give the breakup in terms of space, defense and non-defense?
You are asking the current order book?
Current order book breakup and even the revenue breakup this time.
Achha, whatever we have achieved now. I'll save you that information. What we have done is, if I see the sales wise, we have in this period 25% from the space, 30, almost I will say 50% coming, 50-55% from the defense. Then energy sector we have around 4%, others 10%, and export 4%.
And so order book breakup would be same or different?
Order book is also in the similar line, I will say. Almost you can take in the similar lines. Order book also. If we see what is the order book, is not in the percentage form, no? Percentage नहीं है ना? So order book also in the similar level. When we have the space around, in fact it has come down now. It is coming to almost less than 20%. It is coming almost 15%, 15 to 16%. And defense is coming in the big way. Almost I will say 70% is coming from that defense side, and balance exports and railways and all.
And sir, what guidance will you give for this year and the next year? I mean, what will be the growth and the profit margins?
Profit margins, I cannot say right now, but the growth, as I told already, we are planning to achieve around 25% growth on a year-to-year basis.
But would it be fair to predict that the next half will be better than this current half will be much better because of the nickel prices going down?
It is always the case in Medani. The second half will be better because slightly cooling off the raw material price also. But how much we are going to gain, because this we have problem with that in the first half we have our consumption level has been substantial. We are trying to minimize in the second half. So we will see it will improve further. But how much value and all will be, once we see the quarter 3 results, we will be having the more confidence.
Okay, that's it from my side. Thank you, sir.
Right.
And all the best.
Thank you. Before we take the next question, we would like to remind participants that you may press star and want to ask a question. The next question is on the line of Rommel Jain from Electrum PMS. Please go ahead.
Yes, sir. Thanks for the follow-up. Sir, one question is on the orders that we have received in this quarter. If you can just, if possible, which are the key orders that we have received, in this quarter?
We have got from almost a space around 20% almost from the space. And we have got majority of coming from the 70% I say coming from defense. Naval is around 289 crores, Aero 80 crores, then we have got from the missile around 54 crores. So that way it is coming to that level of 70 and then 20.
Okay.
Rest 10 is coming from the exports and others.
And let's say based on the pipeline that we have, how is the pipeline looking? Has it increased in the last 1 year or so, and where can we end the year in terms of order book?
See, last year total order book was 920. This year we have almost crossed 720 right now, and I am expecting another 700 definitely coming from the next half.
So another 700 crores orders roughly coming in the second half.
Yes.
Okay. Got it. Sir, one question on the pricing environment that you mentioned. So obviously there is a raw material issue and it is not in our hands also. So when we are bidding for the orders, right? Is it not possible that we increase the prices for this uncertainty, or we are not allowed to increase the prices? How that works, sir? Because everybody knows that there is a problem of titanium or there is a problem of supply chain. Then probably why should be the one who are taking it, right? So can't you increase the prices to that extent?
First of all, you have to see the orders which we are getting now. Many orders we have to go on the competitive bidding.
Okay.
So if we add up so much price for the raw material itself, probably we will not get the order itself. That is the first thing. Now next that we are whatever the margin you have to keep from that particular time. No? You cannot go for predicting that raw material price will be 30% higher, 40% higher. Nobody can be doing. Otherwise, it is difficult to be in the market.
So whatever we have quoted is the present prices only.
So normally we see the current price we quoted. Then if the price is going up, then only we have to see that our margin is
coming down.
Yes.
Okay. And sir, in case of competitive bidding, so almost all the projects or orders that we are getting are competitive bidding, right? So how many players are there in this bidding, and how many Indian players are there? How many non-Indian players are there? If you can give some idea about that.
It depends on the order to order. Many places we have only 2. Some places we have 4 to 5. Some places we are finding even the 10, 11 also. And many cases we see today that people even we have to bid against the international competition also. So these are the challenges are there. And today for the projects which people are getting, they like to get platform also. Their pricing also are very, very competitive when they book their platform. So they will also try to negotiate very hard, even though if it is on single tender basis. Because they go for all your costing data and all, then only you can give. So you know that many orders which they are getting on the Ministry of Defense is giving now. They do the lot of analysis, then only they fix the price. And they will be compared with the international bidding and all. So it is built in the platform itself for which we are bidding. So these are the challenges which everybody has to face, not only Medani, any companies who are in this field they have to face.
Okay.
Even for the country space also. Space also right now you see now we are supplying to all the private people like we are supplying to a consortium made by L&T, HAL. So there also we have to highly competitive. So they have to compete. They have won this order against the competitive bidding. So they are trying to see that how they can minimize the cost of the input material.
Okay. And sir, lastly, how much is the capex we are expecting this year and maybe next year, FY25? And out of that working, the total borrowings that we have, roughly I think 400 crores, how much would be the working capital borrowings?
Our borrowings is only, we have 100 crores, so we have the capex is there. And
100 crores capex this year.
Capital only. And this year means it is already drawn, and we have already made the projects already. That values already were completed. The balance already, which we are trying to do this year, around 80 crores is our capex.
Okay. And on the working capital loan, sir, how much would that be?
Capex, we have not planned additional borrowing this year.
It is 350 crores.
350.
350 is the working capital loan.
Yeah.
Okay, sir. Thanks a lot. Thanks.
Thank you.
Yeah.
A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Hi. Thanks for the opportunity, sir. I have a few questions. The first one is essentially on the revenue breakup. If you can give between super alloys, titanium based alloys, and specialty steel for this quarter.
Okay. That will provide you. We are not having the ready-made data level coming from the super alloys and all, but I will provide you that information.
And going ahead, sir, as we see that the order inflow that we are expecting of
Titanium, we will give you the right figure. I'm having the approximate. I don't want to give you that figure, but definitely I'll give you that information.
No problem. I'll ask completely for it. The second one is on essentially that going ahead, do you expect the 700 crore incremental that we are expecting in H2? Will the component of, do we see the higher component of specialty steel and super alloys in that compared to titanium, or how is it? Is it going to be very similar to what we have seen until now?
Okay, what we have booked?
No. The order
booked order we have expected or booked?
No, expected as well as booked. If you can provide both. So the question is that we are expecting 700.
Yeah, booked already. We have made the. Yeah, just you listen. Special steels 252 crores. Super alloys 171. Margin steel 151. Titanium alloys 128. And others coming to almost 13 crores.
Okay.
And if you see the expected one and all, so expected also we are having almost in the similar mix, little bit there. We'll inform you that what it is going in the sequence by. So very difficult to talk about that which order we are going to get first and all. But we are sorry.
Mr. Dixit, are you done with the question?
No. I have a couple of more. I was actually the managers were discussing on this, so I was waiting for them to complete. Yeah.
Right.
So the second question I have is on so since we are increasing our titanium capacity quite substantially, and as I understand that we have got capability to participate in the aerospace program for the future, along with HAL maybe. So I just wanted to understand. I don't want a 1 year, 2 year perspective, but from a 5-year view, when our titanium capacity would be up and running, what kind of revenue growth or profit growth do we expect? What all platforms do we expect to participate? And if you can highlight some of the major upcoming platforms, such as the Tejas Mark II engine or Mark 1A engine as well, or whether we are going to participate in certain of these, missile programs. So certain platforms, the big ticket items would certainly help at this stage from a long-term perspective.
I think many could. If you ask me on the platform-wise consumption, is it not? So for Tejas, one thing is that Tejas, the engine is coming from GE. So whatever we are supplying, the materials are very basic in nature. That there we have mainly titanium alloys and some of the steel, special steels, and little bit of super alloys, very less. But what we see in the major consumption of the super alloys for the Indian program is coming from development of Kaveri engine, Kaveri dry engine, which you might have seen now for the unmanned vehicle which India is developing, so for that purpose. So also they have some program for making the ATG and also development of the alloys for MCA, that is for Advanced Multi Combat Air Vehicle. So for these areas only the special alloys are required, and more focused way now the things are coming for indigenization of some of the alloys for our foreign platforms. So those things are expected to now originate. But that once it gets crystallized, then I will inform you. But there is a lot of combination of again steel, super alloys and titanium alloys. So basically in the aero engine only, if you are entering, then we have the major consumption of titanium nickel alloys. So we are expecting in those areas and some of the areas where we are exporting also.
Okay, sir. I have other questions. I'll come back in the queue. Thank you.
Yeah.
Thank you. The next question is from the line of Kush Nahar from Electrum Portfolio Managers. Please go ahead.
Hello. Thank you for the opportunity. So our first question was, broadly, can you mention the percentage of our revenue which is titanium-based and nickel-based?
As I told to the previous question itself, sir, that this communication I will send you in our format, that what we have achieved in the H1 of FY2024, we'll send you that information.
Okay.
Or the classification that how much percentage we have done this.
Okay.
Right now it is not there as a complete information. I want to give you the right figure. So I'll send you. Okay?
Okay. Yeah. And so my second question was, so what kind of shift are we seeing? So, for example, our order book in the previous years was around, in the range of 800, 900, and today we are expecting around 1600 in this year. So what kind of macro changes are you seeing in the industry?
I have told that this year we are expecting order book of the build-up of around 1500 crores. That's what I have told. I have not told about the 1600. Of course, around 14 to 1500. This is the one question. Second, that you are asking that classification, which sector, which already I have told that defense is the major one. Almost will be, you will find that 80% will be on the defense side only this year, and which will be maintaining that majority will come from the defense only, and balance coming from that export and space. But definitely space is dipping down. It will be very less in the space because already we have made all supplies to the space almost we have completed. Now very less requirements are left now. So they have a good level of inventory now with them. So they are, unless they consume that, then only go for the next requirements.
Okay. Thank you, sir.
Thank you. The next question is from the line of Amit Dixit from ICICI Securities. Please go ahead.
Yeah, thanks for taking my questions again. So I have three questions, and these are more of a bookkeeping questions. The first one is, if you can just let us know the revenue, incremental revenue that was booked from the carbon factory and white plate mill in this quarter.
Order book for the white plate mill?
No, the revenue that was booked in this quarter.
Yes, we have made from this quarter, from white plate mill. White plate mill sales, we have a direct sales coming from white plate mill, how much? Around 120.
We are taking 3
All 3,200. Huh? We can say around 100 plus. one?
And for Rohtak Almond factory, sir?
From Rohtak, it was around 60. Around 60.
60 crores. Okay. The second question is, sir, what would be the level of contract assets and customer advances in the book?
Which one? Grant.
Contract assets and customer advances.
Contract asset, that sort of thing, we are not having that.
The customer advances will be there.
Customer advances will be there. You are asking about the advances in the terms of money?
Yeah, money.
See, we get advance of 30% normally, customer advances. 30% of the order value they give. Presently, in fact, earlier we got from the GSSC, that is ISRO. Now we are completing the supplies that advances come, but still we are getting some advances. Only in the first half we got 200 crores advance.
So currently, sir, how much is there in the books actually in your balance sheet, customer advances? Is it 300 crores?
Okay. And I'll tell you.
Balance sheet, he will tell you the figure.
Okay. The next question is, there was
Tell me,
there was a substantial increase in payables in this half year. So can you let us know what was it? I mean, on the account of around 153 crores.
Which one?
Increase in payables.
Yeah.
Payables.
You must have seen, as we have explained, our pressure on the inventory. Our inventory has built up. It has increased by 248 crores compared to last year. So, as we explained, that raw material consumption, most of the payables are raw material only, nearly 150 crores like that. Because of fund crisis, we have to delay some payments. Because we are not going for any further working capital. Because already Nigam has tied up for 350 and around 330 crores.
Yeah, but we also have the receivable now. Receivable are taking a lot of time because of, that payment has to come from the government. So it takes time in processing and then the submission. So that's why considering that, we are not taking the working capital loan. So this is basically the balance is coming, but then both sides, payable is also getting delayed, receivable also we are getting delayed.
Okay.
Nearly 360 crores advance.
360 crores. Okay.
In that 200 crores received in the first half.
Yeah, 200 crores in the first half. Okay, sir. Great. Thank you and all the best.
All right.
Thank you. The next question is from the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi, sir. Few questions. First one is related to ISRO. After the success of Chandrayaan, they are looking at Gaganyaan, and we have already worked for them. So would you like to take us through what sort of work can Midani do currently with Gaganyaan and the projects associated?
Yeah, for Gaganyaan, of majority of supplies already we have completed.
Mm-hmm.
And now the limited requirements are still there. So there we have some special materials like titanium plates and some of the grid fin. So still some requirements are there which we are executing. So I'll say 90% already we have completion is over for the Gaganyaan requirements.
And there's no other phase or the phase 2 of the same project that ISRO is looking at?
ISRO right now they have they are going for a public-private partnership model. So the many things are now getting in the offering now. It will be coming in the future. It will take some time. But they have one thing has come out now that 5 PSLV they have given to L&T and HAL consortium. So that 5 PSLV orders we have received and which we are already executing now. So this current financial year, for the 5 PSLV requirements, we will be giving from already supply started. Okay. We'll be finishing in this financial year for the entire supply for the 5 PSLV also.
Okay. Sir, knowing that these material will be of very high quality and high purity requirement, do you think you will be able to liquidate the strategic material that we are already carrying since last 2, 3, 4, 5 years?
Yeah, it's a big challenge because these are the strategic, as you rightly word put the strategy. And today the world is very in that difficult, critical situation. So these strategic materials, first of all, you have to find out the buyer. And the buyer should be having no bad intention. It should be used for a constructive purpose. And also, if it is better, it is used within the country. So there are many challenges. We are trying to see that how best we can utilize. We have got some success also in that area.
Okay.
Our focus is that in today. But recently also we have done a very unique development in technology. Earlier we used to use for space requirements with pure materials. So now we have gone to 50% scrap. Now we are looking for even higher content of scrap also. So these things are not done immediately because many testing qualifications are required and customer has to agree for that. So some work is moving in that, but that is very less because whatever we have piled up is not 5 years. It is right from the inception. Many things are right from the inception, only it has been piled up. So we have to see that how best we can utilize, because these are all valuable materials, having a lot of good, you have the nickel, you have the cobalt, all valuable materials are there. We are trying to best how to buy that. One way is that to find out and sell it in the market, but that sort of possibility is not there. That we can get some good customers.
Okay. So my second question is, looking at the margin erosion that we have seen, and I'm aware that in the second half we generally use quite a lot of scrap material. But if you look at the bottom line, do you think you'll be able to close the year with the PAT levels of pandemic or pre-pandemic levels of 130 odd crores or something like that?
We are hopeful, actually. We are hopeful and we are trying for that. We will be definitely trying to see that how best we can optimize that.
Okay, so that's all from my side. Thank you. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Amit Dixit for his closing comments.
Yeah, thanks everyone for attending the call this morning. I would also like to thank the management for sparing their valuable time for interacting with us. I will now invite Dr. Jha for any closing remarks.
Yeah, first of all, I am extremely thankful to all the investor stakeholders for showing your interest and giving a lot of very valued your questions and queries. And we have tried to answer to the best of our abilities. Certain things which you have asked, probably we have not answered to your level of satisfaction. But many things we have to see that how we can take care of the interest of the company also, because many informations are very crucial in nature for the strategic program of our country also. So we have done to that extent. And whatever you have seen, the results which has come, we are also trying to see that how we can improve it further in the coming quarters and see that Mizani will be in the right place. But one thing is that this industry is now and in very, I'll say, transformative stage because of the change in the requirement of the materials in the different types. So we have to see that, and this is a time where investor has to put the confidence on us, and I am sure that we will not make you happy at the end of the day. And entire company management is working hard. We have a very good team of engineers, committed people. They are working very hard to minimize, and many new products we have developed, which if you can say that recently also we have got the product development for C276 alloy for BHEL executed successfully. And also we are trying to make many alloys for our aero engine program. Many foreign supplies we have made for aerospace industry right now. So we are trying to see that how Midani can be a leading material supplier for the aero engines or aerospace in the future, not only in the domestic, in the international front also. So this is the challenge. So I'll say this is the stage where the company is in the complete transformation, and we need the blessing and support of all the stakeholders. Thank you very much.
Thank you, members of the management team. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your line. Thank you.